Hello and welcome to Morning Trade with Moneycontrol in association with M-Stock by Mirae Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the course of the show. So guys, keep the comments coming on our live feed and we'll have them addressed by our guests. Let's quickly first take a look at the global handover. Europe closed on a higher note on Wednesday. Global markets watched monetary policy moves from several major central banks. Key indices in Europe closed with gains of over 1% each. Meanwhile, the European Central Bank held an unscheduled monetary policy meeting on Wednesday with bond yields surging for many governments across the Eurozone. The US Fed Reserve on Wednesday announced a 75 basis points rate hike, which had been widely anticipated by the market. On Wall Street, major averages ended Wednesday's session higher with the Dow and S&P both snapping five-day losing streaks. Dow gained a little over 300 points while S&P 500 advanced 1.5%. Nasdaq Composite was the relative outperformer, rising 2.5%. Tracking the moves on Wall Street, Asia Pacific markets rally in trade today, and for Indian markets, SGX Nifty indicates a strong opening. All right, let's touch base with Ajit Mishra of Religare Broking. Good morning, Ajit. How's the trade setup looking like? And today is also the weekly expiry, so tell us what to expect.
Good morning, Karunya. So yes, we are seeing that a bit of relief in the global market, and that might reflect in our market as well. But broadly, if you see the construct, the overall view is still negative because we are retesting the March lows, and though we are seeing some sort of respite in the global market, but the reversal is yet to happen. So today being the weekly expiry, we expect Nifty to face resistance close to around 15,900, 16,000 zone, and on the downside, closer to around 15,600 to 500 zone would act as an immediate support. So yes, I would recommend that in case if we witness a rebound like what we are seeing in the SGX, it's prudent to book some profits in the long position in case if you have, and wait for the fresh triggers.
Okay, so which pockets of the market do you see more active in trade today? Anything that our viewers should also be looking at?
Karunya, largely if we see that almost all these sectors are really under pressure in line with what we are seeing in the benchmark, but auto is definitely the one which is showing resilience, and almost majority of the counters are participating in the rebound or doing well. So that sector definitely should be on your radar. And other than that, it's more of like stock specific approach that one should maintain, because even in the index, if you see that Reliance, ITC, these are the stocks which are doing well. So it's more of like stock specific approach that one should continue with.
Okay, all right. Let's get going and talk about some queries also. The first query that we've received is from Shiv Kumar. He wants your view on Birla Soft. Now, this is an interesting play on the mid-cap IT space and a stock that we don't discuss too often. So, talk to us about Birla Soft and the overall IT space as well, if you could share your insights.
So, this sector, when we started this correction in the month of October, it started with the correction in the IT space and then it cascaded to the other sectors. And still we are seeing that though the pressure has subsided a bit, but the overall tone is still negative. So what we recommend, especially when it comes to the IT pack altogether, is to wait for any reversal signal to happen before making any short-term bets. But yes, when it comes to investment, selectively one can start nibbling in some of these index heavyweights, be it TCS, Infosys, and some of these mid-cap IT names like Birla Soft, wherein the fundamentals are very strong. And Birla Soft, technically also we have this support of close to around 340 zones, which it has been respecting for almost 2 weeks now. So as long as it's holding above this, you can continue with this position, long position. But the upside also seems capped. So closer to around 365, we have the immediate hurdle, and then close to around 380, 85 zone, we have a very strong hurdle. So around those areas, one can book profits, and for fresh buying, one should avoid.
Okay. So let's talk about, from a less talked about stock to the D Street darling, which is DMART. We've got a query from Rinal Sharma, and she wants your advice on whether to buy this one or not. It is, if you look at the last 15-20 days pattern of this particular counter, it looks like it is trying to, break out or trying to grow in a meaningful manner. But will it really succeed, or will it be sluggish like the larger breadth of the market?
So, Karanya, this correction started in DMART in the month of October 2021, and the level was close to around 5,900 levels. So, it has reduced to around 3250 before witnessing any rebound. So, the correction is definitely fair enough, and the levels that we were anticipating on the monthly and weekly charts, the closure around 3250, we have very strong support. So far the structure looks okay to us, but in case if your view is short term, I would recommend to wait for a decisive break above 4,000 levels for any momentum. But in case you wish to accumulate, definitely it's a good zone to accumulate. And the zone should be closer to around, let's say, 3,600 to 3,400 for the short term. And your stop for this position should be at 3,200 levels.
Okay. Let's move right on and talk about some more stocks from the mid and small cap space. That's where the interest seems to be today. We have a question from Joshua. He wants your view on Voltas as well as DLF. So if you could address the stocks one by one and tell us what is your assessment of the technicals.
So Voltas, it was almost a vertical decline, in the month of April from roughly around 1,300 levels to 900 zone. And now we are seeing a little bit of respite, but still have multiple resistance zones to cover. So the first resistance comes to close to around 1,010, 1,020 area. And above that, we can see this rebound extending towards the level of around 1,070, 1,080. So for fresh buying, I would recommend wait for a breakout above 1,010, and your stop should be at 970 in that case, and 1,075 should be your immediate target area. Broadly, the trend is still negative, so it's just a rebound that we are playing. DLF has retested the crucial support of close to around 300 zone. It tested the same toys, in the recent past, and respected the same as well. So we may see some rebound in DLF as well, but this level close to around 330, 335 is the area basically where we have multiple resistances. The risk reward is not favorable in the DLF, so I would recommend wait for a breakout above 330 decisively to go long in DLF, and in that case 345, 360, that could be the target area.
Okay, makes sense. What about LNT Infotech? Hiren Joshi is asking if it's a good level to buy.
See, we were discussing that IT pack, the pressure has subsided, but the trend has not reversed yet. So LTI also, I'm eyeing this level of close to around 4,400 for any sign of reversal. Above that, definitely we'll see some, respite and a move towards 47 mark. Meanwhile, I believe that the stock may continue to hover within this range of 3,800 to 4,400. So in case if it comes closer to the lower band, that is 3,800 mark, you can definitely go long with 3,600 stop loss or a breakout above 4,400 for fresh longs.
Okay. Ajit, request you to stay on with us. We have a lot of queries coming in, so we'll come back to you in a moment. But for now, let's move on to the major development. In its biggest move since 1994, the US Fed has hiked interest rates by 75 basis points. To analyze the impact, let's bring on board Santosh Rao of Manhattan Ventures Partners. Thank you so much, Santosh, for taking time out. I'm sure you're having a busy evening. But talk to us about the current picture that the Fed has painted of the US economy, and how could it perhaps reflect on the larger markets of the world, especially emerging markets?
Sure. I think, thanks for having me. Overall, I think it was a good performance by Jay Powell. I think the whole issue was about credibility. Coming into this meeting, can the Fed regain its credibility after its 50, 75, the wobbling that they did? I think the fact that they did it firmly, and they said that they're going to be data dependent, might have more. And I think that was a good thing. I think the estimates that they have forward is in sync with what the market is expecting. expecting and was expecting, because the whole issue before was that the Fed is way behind and the market was just not believing the Fed's ability to solve the problem of inflation. I think with this thing, I think the Fed is moving closer. I think it is a good first step. Let's see if they can hold the 3.4% Fed funds rate by the end of this year and 3.8% next year. So I think hopefully that will tamp the inflation pressure to some extent without pushing us into recession. That's the big bet. We don't want any more shocks to the system. Let's see where that goes. But overall, I think in the near term, you can expect a rally, or I do, just based on some clarity as to where the Fed wants to go and the fact that they are in sync with the market.
Is that the reason, Santosh, why the markets bounced back? Because right after the Fed decision was out, there was a small dip that we saw in the US markets, and then that was followed by a good recovery. So in the foreseeable future, you expect, like you said, the upward momentum to continue because of clarity? And more importantly, could that reflect in EMs as well?
Yes, it will. I think U.S. pretty much drives the whole economy. It's the best. It's the best economy right now, relatively speaking. So I think overall it will have a good impact. We saw the dollar pulling back as well, the rates coming down a little bit. I think all that has a beneficial effect on the international markets. But overall, it's all near term at this point. Let's wait and see. And he himself said that he wants to wait and see. But at this point, this is what he's projecting. We have 3 or 4 big data points coming in the next 2 or 3 weeks. We have earnings reports coming up, because earnings is going to be a big issue right now going forward. Are we going to see some erosion? Is the inflation having an impact on the companies? That's a big deal. We have the preliminary GDP number for the second quarter. That's going to be a big deal. We had a minus 1.5% last quarter. So I think if we have 2 negative ones in a row, that's a definition of a recession, but hopefully we don't get there. So I think a lot of ifs and buts at this point, and then we don't want any more supply shock, which he himself admitted that he has no control in terms of the war and in China and all that. So I think there are some issues. But at this point, from today's vantage point, looks like things are a bit clearer and it should go forward. It should have a beneficial effect going forward. We'll have a bear market. Believe me, we are still in a bear market. It's these rallies that will come in between, and we're getting one of those. It's kind of a relief rally to some extent, but we will rally nonetheless, because now the Fed is in sync with the market.
No, Santosh, this is a live show that we're streaming for our audiences on the website. So a lot of comments and engagement is happening real time. So one of our viewers is asking, will US markets correct themselves more? So what is the forecast that, market watchers like yourself have for the rest of the year? After so much volatility, do we see some amount of stability coming by now that Fed has provided some clarity on the monetary, on the fisc side, on the monetary side? Or is volatility going to be the flavor?
Volatility is going to be the favor for a long time, because inflation is still very high. I mean, above all this, or underneath all this, is the reality that inflation is high. It keeps going up. And now we're going to have the comparisons are going to get worse going forward because of the roll-off from last year. So I think you're going to have that base effect going away. So overall, I think volatility is going to be the name of the game. You really have to be selective in what you do, in the sectors that you do. Go for high-quality names, companies that have earning power. That's going to be a big deal, that pay dividends. So you have to stay the course, but you just can't invest across the board. There's still downside in the market in a longer term, mid to long term, maybe another 10%, come to about 3,500 in terms of S&P 500. On a very long term, the most bear case is about 3,200, but I think that's really too far away if things get really bad. But in the near term, I think 3,500 is a good benchmark to shoot for. I think that gets the S&P to around 15 to 16 times the earnings projections, forward earnings. So I think that's a reasonable number on a historical basis, not fully there on a historical basis, but getting closer to that. I think that will take away some froth. take away some uncertainty. But volatility is going to be the name of the game, just because there's so much going on in the macro space as well, between China and the war, and even here the inflation creeping up slowly, step by step. I think we need to see how well the Fed can soft land this whole thing without pushing us into a recession. That's the whole thing. That's the whole bet. It's a delicate balance. The market at this point thinks the Fed can do it, but let's wait and see. They're going to get the benefit of doubt, essentially.
So, according to you, in order to be able to meet the inflation target and to meet the economic growth target, what is the kind of quantum of rate hikes do you foresee for the rest of the year? Because the guidance seems to be anywhere between 75 to 50 bips, but what's your guess?
Yeah, I think he's pretty much said it. It's going to be 75 again in July. And the next one will probably be 75 as well. Overall, he wants to get to 3.4% by the end of this year in terms of the nominal rate. It used to be 1.9, that was a projection, but now he's made it 3.4. So I think it's going to be 75, and probably 25 to get to that. And then 3.8% nominal Fed rate in next year. So I think that's the projection. He said it out there. He's been very clear about what he wants to do. Now the big bet is that enough? That is the big bet. I'm in the camp that says it might be enough at this point, unless there is some other major shock on the supply side and other disruptions. But I think this should be okay. We've lived with 4% in the past. It's not a big deal. On relative to the 1% and 0% that we've had, it looks like a lot. But 4% on a historical basis is not much. US can withstand that. And I think we can avoid a recession if there's no really big shocks. But right now, the bet is that we can avoid the recession, and he's going to be data-driven and be ahead of the curve, or on the curve rather than behind the curve that he was so far.
All right, then. On that note, Santosh, thank you so much for joining in and for sharing your insights and your assessment of the big comments coming in from the US Fed chairman and the announcement of a 75 bips rate hike for this time around and the coming months as well. Thank you so much for touching base with us.
Thanks for having me.
Okay, let's bring back Ajit Mishra and talk technicals once again. Ajit, today definitely we could be looking at a positive open, but what is the trend that you forecast for the next couple of weeks or perhaps next couple of months? Is it likely going to be volatile the way things have been, or do you see any sort of a trend that could stabilize and extend over a period of time?
So Karanya, if we see that, the correction started in the month of October, and since then we are seeing that, index has been trading in a negative trend. Negative trend means making lower highs, lower lows, and this trend is still intact. And for that to reverse, we need to have a higher highs, higher lows pattern. And at the same time, since we are very closely following the US market, stability in the US market is very critical. And what we are seeing on the Dow Jones chart, a level close to around 29,500 to 30,000 could be the area basically where we may see a bottom formation or a possibility of a pause or a consolidation in the US markets. So keeping that in mind, a level close to around 15,400 in the near future, because in case if we breach the March low, that could be the area basically where Nifty would find the spot, and upside close to around 16,200 to 16,800. These are the area basically where we're going to face resistance, strong resistance in case if the market recovers. So it's a broader range like 15,400 to 16,800 is that what we are eyeing. Below 15,400, obviously that a level could be closer to around 15,000 and 14,800 also. But as of now, indications are in the favor that since the Dow Jones is also almost reached to the 30,000 mark, and we are seeing some sort of respite there. So possibility of a rebound is high, but at the same time, since we are seeing the broader market's not doing well, so we need to have a sign of reversal, any sign of reversal or pattern formation. So in between, it's prudent rather looking at the averages, maintain stock specific, sector specific approach that would yield better results, because that is what we have seen in the entire correction. So be it Reliance, be it ITC and the auto pack, which are doing well, please focus on them for the long trades, and the sectors which are really under pressure, look for the opportunities on rebound to go short.
Any impact that you expect today on Bank Nifty? That's a question also coming in from our viewer Asad Khan. So in today's trade, how do you see Bank Nifty playing out?
So banking index, Karanya, the recent rebound that we saw, in the month of May, it was led by the banking majors. But now again, we are seeing that fizzling out. Comparatively, yes, it's stronger. But we need sustainability above 33, 500 zone for any rebound also. The rebound related around 3450, 34,500, 34,600 zone. But structurally, it's still looking weak to us. So as we have said, even if we see a rebound, it's an opportunity to liquidate longs in case if you have any and look for the short positions. So other than auto, we strongly believe that all the other sectors are still in a negative formation broadly. So we may continue to see a rebound here and there, but a decisive move seems unlikely in the banking index.
All right. Let's quickly address a couple of more queries before we, run out of time. Gokulnath Saravanan has written to us on Vedanta and IRCTC. Let's talk Vedanta first, because this one has been fairly weak, especially last 1 month. The stock has eroded more than 150 or perhaps almost $200 on its stock price. What is it that you foresee?
In fact, Karanya, if you talk about sectors, metals and PSU bank, we strongly recommend to avoid for long positions because the kind of surge that we have seen in the previous rally in the metal space and now the kind of pressure that we are seeing, structurally that tone has changed for the metal space, and we are seeing profit taking across the board. So in Vedanta also the stock is reeling under pressure. It has lost the major averages, and in fact this is a short recommendation for the day as well from our side. So broadly avoid Vedanta for sure. And what was the other stock that we were referring to?
Okay. How about IRCTC? Would you recommend a buy there?
Yeah, so IRCTC is an interesting bet because in the recent rally, the last time when we saw that stock, almost rose nearly from 300 to 1260 levels. But after that, we are seeing gradual decline. But now we are seeing that volumes are fading away in this negative drop. So that is something which is positive. So I believe it's an opportunity now in case if you're a long-term investor, to start accumulating in the zone of 570 to 600 area with a view of at least a year or two. And upside, in case if you wish to go long for a very short term, then wait for a breakout of a 720.
Okay. Ajit, what are the stocks that you would like to recommend to our viewers? Anything that you're keeping on your radar?
Yeah, so Karanya, we have been recommending our clients to maintain long and short approach, considering that the volatility is there, plus, but at the same time, we are seeing selective counters doing well. So on the long side, we have Coromandel. This stock has been trading at the record highs despite of the kind of carnage that we are seeing on the street. And we believe that this momentum would continue at least in the near future. 1,050 should be a target area and 900 the stop loss. The other two recommendations are on the short side. So SBI, from the PSU banking space, we like to go short in with the stop loss of around 464, 422 should be a target. And lastly, VEDL, we just discussed that the overall tone is negative, structurally it looks weak, and we are eyeing around 270 levels in VEDL. So 303 should be a stop loss for this short position.
Okay. All right then. Thank you so much, Ajit, for joining in and for talking to us about the technicals of the market, what are the key levels to watch out for in trade for today and for the next couple of sessions as well, and the stocks to keep on your radar. That's all we have in this edition of Morning Trade, guys. Thank you so much for tuning in. Stay tuned as Markets with Santo and CJ comes up right next.